Okay, let's dive into one of the biggest stories to hit South African finance in years. It was called Project Apex. And trust me, this wasn't just another business deal. It was a bombshell, a move that completely redrew the map for banking and small business in the country.
It all kicked off with this number, 1.65 billion rand in cash. That's the price Nedbank, one of the oldest, most established banks in the country, paid to buy a fintech company called iKhokha. I mean, just let that sink in. It was a massive, massive bit.
And that right there is the central puzzle we're going to unpack. Why on earth would a 188-year-old financial giant, a true pillar of the establishment, spend a fortune to buy its total opposite? A disruptive, nimble upstart that literally built its brand on being the anti-bank. To figure that out, we've got to understand the battlefields they were fighting on. And that battlefield, you guessed it, is the small and medium-sized enterprise market. You'll hear it called the SME market. For years, this has been both the biggest opportunity and, frankly, the biggest headache for South Africa's major banks. Look, helping these small businesses isn't just about banks making a profit. It's a flat-out national economic necessity. This sector makes up more than a third of the entire GDP. It employs up to 60% of the country's workforce. The government is literally banking on these small businesses to create millions of jobs. They are the engine of the economy. But here's the kicker. Where is this engine really? Well, the huge majority isn't where you'd think. Out of about 3 million small businesses in South Africa, a jaw-dropping 86% of them are informal. We're talking about the spaza shops, the guys at the market stalls, the cash-only businesses that are the lifeblood of so many communities. And for the banks, a giant, completely untapped market. And this is the core problem, the big disconnect for a bank like Nedbank. Their whole system, their DNA, is built for formal companies with perfect, audited financial statements. But the reality for most SMEs is the total opposite. No formal history, everything's done in cash, and they desperately need cheap, simple solutions. It's a complete mismatch. You know, like trying to jam a square peg into a round hole. It just doesn't work. So, while the big banks were scratching their heads, a whole new breed of fintech challengers was quietly cracking the code. And at the front of the pack was a company called iKhokha. Their genius wasn't just their tech, it was their whole strategy. They used what you could call a Trojan horse strategy, and it was brilliant. Okay, so step 1, they sold super affordable little card machines, no more expensive rentals. This got rid of the biggest barrier for small shop owners. Step 2, once the machine is in, you're processing all their payments. You are now inside their daily operations. Step 3, and this is the key, you start gathering unbelievably rich, real-time data with every single swipe or tap. And then, step 4, you use all that juicy data to offer the one thing these businesses need more than anything else: cash, loans, cash advances, you name it. And this, right here, is the secret sauce. The little card machine was never the real product. The real product was the data. It gave iKhokha this crystal clear live window into how healthy a business was, something a bank could never, ever see from a pile of 6-month-old financial statements. So you're probably wondering, yeah, but did it work? Well, this number says it all. Before Nedbank ever came along, iKhokha had already loaned out over 3 billion rand to its merchants, and they did it based entirely on their own payment data. They proved the model wasn't just some cool idea. It was a real, profitable, and scalable business. And almost as important as the tech was their brand. By shouting from the rooftops that we're not a bank, they built this incredible level of trust with entrepreneurs who, let's be honest, were pretty skeptical of the big corporate giants. That brand identity, that was a priceless asset. You just can't build that kind of street cred overnight. Okay, so now we have the 2 main pieces of the puzzle, right? You've got a giant bank that's desperate to crack the SME market but can't. And you have a fintech that's figured it all out. So let's look at Nedbank's master plan for bringing them together. The thinking here was just beautiful because it worked on so many levels. On one hand, it was a defensive move. It took a dangerous, fast-growing competitor off the board. Offensively, it gave them a super efficient, cheap way to get thousands of new customers. It gave them the data, the key to finally unlock lending to this market. And it was an accelerator. They could instantly buy a cutting-edge digital platform and culture instead of spending years trying to build their own. It all really boils down to this powerful idea called data arbitrage. It sounds fancy, but it's simple. It just means you have better data than everyone else, so you can see and price risk way more accurately. While other banks are basically guessing, flying blind with old information, Nedbank, through iKhokha, could now see the absolute up-to-the-minute reality. I mean, just look at the difference. The old way of doing things, with old statements, meant risk was this big, scary, unknown thing. So what happened? High rejection rates. The new way, powered by iKhokha's live sales data, suddenly risk isn't scary. It's visible. It's manageable. And that means you can start lending confidently and at scale. It's a total game changer. And to really get the sheer genius of this move, you have to zoom out just a little bit. See, Nedbank had already spent almost 12 billion rand completely overhauling its core technology. They had built this massive, powerful engine. The 1.65 billion they spent on iKhokha, that wasn't just buying tech, that was buying the high-octane fuel needed to make their massive new engine roar to life. So with that one move, that one signature on a piece of paper, the entire competitive playing field just got redrawn. This isn't just about Nedbank anymore. It's about how every other player on the field now has to react. So what does this new battlefield actually look like? Well, the Nedbank iKhokha team now has a major strength that changes the game. A huge bank's balance sheet for lending combined with a fintech's deep reach into every type of business, from informal all the way to corporate. Other big players like FNB are strong, for sure, but this new combination is uniquely powerful. And this puts iKhokha's main rival, Yoko, in an incredibly tough spot. I mean, think about it. One day, you're competing against a rival who's more or less your equal. The next day, you're competing against that exact same rival, except now they're supercharged with the money and resources of a massive national bank. The ground has completely shifted from under your feet. But, and this is a really big but, this deal is so far from being a guaranteed slam dunk. There are huge risks. Number one, culture clash. Can a 188-year-old corporate giant really avoid smothering the hustle culture of a fintech? Then there's the tech. Trying to connect the plumbing of two totally different systems is a nightmare. And maybe the biggest question of all, will those fiercely independent anti-bank customers actually stay loyal now that a big bank owns the company? So, Nedbank's answer to all these risks is to try and put iKhokha inside a protective bubble. The plan is to run it as a totally independent company, keeping the same leadership, the same brand, and that all-important culture. The goal is to give them the resources without strangling them with all the red tape. And that leaves us with the final billion rand question. Is this the blueprint for the future of banking, this amazing hybrid of big bank power and fintech speed? Or is it a massive 1.65 billion rand culture clash just waiting to explode? The answer to that question is probably going to define the next decade of finance in South Africa.